our software that we provide models and directs all the operations of a microgrid. So the benefits of a microgrid and distributed energy generation. As I mentioned before, it's an alternative to shutdowns in fire and disaster-prone areas. And the second point is that it also supports the aging U.S. infrastructure. We put out a press release just last week discussing a Northern California off-grid deployment of a microgrid in a luxury residential application. That's particularly important because not only is the area for the new home in a fire-prone area, but they also have experienced grid instability and unpredictable power situations and circumstances. So by putting a microgrid in, and we're actually deploying that project during the construction phase of the residence, that home will operate entirely grid disconnected through the life of that home. So from construction to occupancy, they won't ever have a traditional utility bill because generation and distribution will be handled on site. Again, it supports the aging U.S. infrastructure. We've all experienced especially this crazy past year, the demands that have been put on the domestic power grid by the shift in all of our behaviors. And the idea of having distributed energy generation and storage really provides that certainty of operation that the companies that do have microgrid or access to microgrid power have that certainty that the lights are going to stay on regardless of the condition within the larger power grid. Beyond that, it also increases efficiency. Many of our customers deploy microgrids not only for resiliency, but also to avoid costs. And based on some new legislation that was passed just in September, opportunities to participate in the power grid as an additional revenue stream. I'll comment on that just quickly that we're working with a large public storage company. They do self-storage, and they're based here in Utah, literally thousands of installations. And the project that we're working on there is how do we leverage this new legislation to allow them to deploy solar plus storage to participate in these grid programs to take advantage of revenue generating opportunities from all these empty rooftops, but that will also support the local areas by creating additional resilient power. And the final point that you see there is cost savings, which is kind of obvious. So what are the factors that are driving the industry growth? Cost reduction and the efficiency of solar. As everyone knows, solar has been on an epic run over the last decade or so. And what we've experienced is that solar's efficiency has increased dramatically. So the installation costs have dropped and the efficiency of the panels have gone up. The kind of counterpoint to that is that the utilities have shifted some of their time of use charges and their tariff rates to devalue some of the solar. And what I mean by that is there's basically a 24-hour fixed rate of power, but they can charge different rates at different times. And so as solar has gained a larger footprint and more traction in the space, the utilities have shifted some of those time of use charges to make the solar less beneficial to the shareholder or to the solar owner, but to maximize the profits to the utility. And so what that leads into is the emergence of storage systems that you see here. And there have been significant improvements in the lithium-ion batteries as well as flow batteries that increase the lifespan of those batteries. They measure those based on degradation and how many cycles they can charge and discharge, not dissimilar from your car. But as batteries increase in performance and efficiency and decrease in cost, it allows the end-use customer to elect to maybe add some storage to their solar system so they can buy that cheap power from the grid during the middle of the day when the sun's out and store it in their batteries or store the solar for deployment later when the utility rates go up. There are also flywheel-based kinetic storage mediums, and we've deployed those on mission-critical applications such as at Marine Corps Base Camp Pendleton. Guidehouse Research Insight, they expect an additional 46% reduction in lithium-ion batteries over the next decade. It's a big deal because as solar developers are looking for a way to continue to enhance and build their relationships with their existing clients, adding storage is a real cost benefit to their end user. The challenge that exists is that unless the manufacturer of the solar panels that they installed a year, 2 years, 5 years ago has a storage solution, you have compatibility challenges. And that's where CleanSpark steps in. And we provide kind of a bridge to that in a vendor and hardware agnostic approach. And I'll touch on that in just a moment. Beyond that, and referring back to the recent announcement in Northern California, we also integrate generators, fuel cells, micro turbines, and a number of other assets and resources. Significant numbers of those do have some portion of that as a fuel cost, as a baseload or backup energy supply. Part of what our software and our technology does is it optimizes the fuel consumption to maximize the value and decrease the costs for those end users. So the market opportunity is growing like crazy. The total microgrid capacity has been forecast to expand from 3.5 gigawatts to more than 20 within the next decade. And industry-wide, they forecast a 28% compound annual growth rate, nearing $40 billion by the end of 2029. The factor that I want to make sure that everyone understands here is that a microgrid, as I mentioned, consists of generation and storage and distribution. But what every microgrid has to have is software, and what CleanSpark has is the industry-leading software solution. So what are those software solutions? We have a fully integrated suite that provides end-to-end solutions.
Hey, just wanted to say hello to everyone. Sorry, we're running through the CLSK presentation right now. I linked where you can find it. I don't know if you have to register first, but you should be able to get into it. We're just running through it. I was talking with the founder, and he said to tune into this because I wanted to know more about their Bitcoin mining. So I'm going to keep playing this, but I'll answer some questions towards the end. If anyone has questions, feel free to tell them what we're doing now.
That process or that program, and utilize our MVSO as a white labeled sales tool that will allow them to give suggestions about growing the microgrid, adding to the solar by putting in storage or a fuel cell or something else, then giving them a thorough cost analysis, explaining the value of the system, how quickly they can recover their investment, what that looks like from a standpoint of long-term savings, tax advantages, greenhouse gas emissions, as well as the overall system operation that's then dictated by our Impulse platform, which you see here. Impulse is our patented controls platform. What's unique about Impulse is it's a forecasting tool. What I mean by that is Impulse forecasts and controls the system based not only on the historical operation of the facility, the home, the factory, the business, the campus, the military base, wherever that's deployed. It looks at the historical operation, but it also forecasts that based on changes in behaviors by the user, as well as deviation in the utility rate as forecast by the utility supplier. But then it also builds in a weather forecasting program. So if we have a solution that's highly dependent on solar, it will change the storage behavior of a microgrid, anticipating cloud cover. Or if there's something that's dependent on wind, it makes decisions accordingly. So it basically takes the man out of the loop to maximize the value according to the vector that matters most to our customer. We also have two other products that we'll speak to a little bit more, but just real briefly, those are called Canvas and Plaid. And those came by way of CleanSpark's acquisition of a company called Grid Fabric. Uniquely, Canvas and Plaid provide the pipe, the communications pipe that allow Internet of Things products, as well as microgrids or industrial and commercial energy users that have smart buildings or have added storage and generation to participate with the utility grid. The requirement is that those communications protocols be certified, and Canvas and Plaid, from a virtual top node and a virtual end node perspective, provide a very quick white labeled solution to allow all of that equipment to participate in the energy grid and some of those programs. So to start with quickly, our MVSO energy modeling software, just going to give a quick history lesson. Where did this come from? When a rooftop solar guy may make an appearance on your door and say, hey, we can save you X amount of dollars, it's a pretty straightforward solution. You've got one house with an air conditioner and a swimming pool and a garage door opener and a range. And based on what you consume, they can add solar and save you a certain amount of money based on utility rates. Our first project was at Marine Corps Base Camp Pendleton. And it was an energy project sponsored by the California Energy Commission and San Diego Gas and Electric. And the challenge was there are 55 independent energy asset providers co-located on Marine Corps Base Camp Pendleton. And for mission critical navigation and controls systems, as well as data centers, we need a solution that will ensure resiliency. So these systems have to stay lights on even when the lights are out. And to every one of our competitors, the solution was we're going to remove and replace all of those 55 different energy vendors and replace them all with our hardware. So if it's a General Electric solar panel, an inverter and charging system, storage system, it becomes a single line application, and it allows them to sell software to the extent that it controls their hardware. CleanSpark's approach to that solution was entirely different, and that is we'll create an ecosystem that is both vendor and hardware agnostic and allow for all of those assets and components to function to the maximum ability of what they're designed to do, but within a single ecosystem. So out of that was born MVSO. And it answers a number of really critical questions about the energy needs of that end user. What's the configuration of a microgrid I might need? Should I add storage? Should I add more solar? Does it make sense to add a fuel cell or a turbine? Does it make sense to maybe charge during the off-peak hours? It answers all of those questions, and it creates a sales tool to allow an energy developer to intelligently go out and speak to their end user about the value of adding to or expanding or creating an entirely new microgrid solution to fulfill their energy needs. So our impulse controller is patented. It utilizes those forecasting techniques that I mentioned to give local intelligence to dynamically modify the interaction of that demand response. So through Grid Fabric and that portal that you see, Canvas and Plaid, it allows us to communicate with the grid. So the end use customer, whether it's a campus, like I mentioned before, or an industrial or commercial client, they have the opportunity through ADR programs to communicate with the grid for revenue participation, but also to work as a shock absorber essentially for the grid. And all of those decisions are made through that impulse controller. It also helps to understand when to maximize battery efficiency, and it adjusts control algorithms whenever rates change or usage patterns change. For example, if a business were to add a heavy piece of equipment and maybe add a third 8-hour shift, the controller will modify the behaviors to maximize the value of the energy assets according to the requirements of our customer. Competitive advantages, as I mentioned before, we're vendor and hardware agnostic. If you want to add a microgrid to your house or your facility and you've already got solar, you don't have to start over. We can add to those legacy assets and maximize the value. Our software is very simple. It's not required that it be customized. It's simply configured. And in most applications, our software can be commissioned and configured within a day or two. As a result of the pandemic, our software team was able to work on the fly to commission a couple of projects that we did in Costa Rica to allow for even remote commissioning, which is a real strategic advantage for us and a cost saver for our end use customers. And that patented forecasting basically makes the decisions to supply power to a requesting module when and if it's needed according to the design of the system. So Navigant Research, which is now called Guidehouse, a couple of years back published a microgrid controls ranking, and they took 75 of the best global solutions for microgrid controls, and they published what their features and benefits were. Later on, they published the Navigant Microgrid Controller Leaderboard that you see here on your screen. They ranked the top 15 global controllers. And as you'll see, CleanSpark appeared on that list at number 10. Number 10 was a big deal to us because you see 11, 12, 13, 14 were companies like ABB, General Electric, Eaton, and Lockheed Martin. What we did following the analysis of that study that was published is we took some of the critical components, the criticisms of where CleanSpark was and potentially the weaknesses, and we focused on improving those to enhance our competitive position within the environment. And we expect through our communication with Guidehouse Research and Peter Asmus, who conducted these studies, we believe that within the coming quarter, there will be another version of the leaderboard published, and we're excited to see where we fall. As I mentioned before, in August of 2020, we acquired Grid Fabric, and Grid Fabric creates the open ADR software solutions. To really quickly summarize what that means, automatic demand response would allow for the utility to send a signal to an end user that we may have an oversupply of energy and need to deploy some of that energy to your storage to act as a shock absorber for the system. The inverse of that equation is on a July day where Gavin Newsom goes on TV and said everybody needs to set their air conditioner to 80 because we don't have enough power. So there's an over demand situation in the state of California. And an example of a Grid Fabric solution that an end use customer there would receive a signal that the IoT products, Internet of Things, smart building management systems, HVAC systems, as well as storage, the utility sends a signal that it's going to pull energy away from those to mitigate the effects of the over demand of the utility. Significantly, that has value to our customer because by participating in these ADR programs, a facility could experience tens, hundreds of thousands, or even millions of dollars in energy-based revenue over the course of a year. What is required is that communications protocol. To build this communications protocol from scratch is a 6 to 9 month endeavor, $250,000 to $500,000, and it takes a lot of time. Part of our solution is integrating these communications protocols within our software and controls offering to allow that white labeled solution to be delivered in as little as 2 weeks and to begin to participate in those programs generating revenue much more rapidly without the significant initial costs. So Grid Fabric has open ADR solutions that apply to both sides. As you see, Canvas, the one on the left of your screen, is used by the grid operators, and that basically administers to the load shifting programs, and it creates the top node side of that communications protocol. On the right side, you see Plaid, and Plaid connects to all of the Internet of Things devices at home or in business, whether that's a smart water heater or even an EV charging station, or as we discussed previously, a fleet of EV charging stations where we utilize that energy asset as a participant in the energy programs for the jurisdiction that they operate. Our most recent acquisition is about ATL data centers. This is something that's been, I've received a lot of inquiry lately, basically because of the excitement surrounding Bitcoin and what this acquisition looks like for CleanSpark. I just wanted to make a quick point that if you go back and look at our press release in January of 2018, so we're talking 3 years ago, CleanSpark actually contracted with an energy developer and designed a microgrid solution for cryptocurrency mining. The idea behind it is looking for energy intensive power users and assisting them to create a solution to offset some of those costs. So ATL Data Centers is a Bitcoin mining focused data center based in Atlanta, Georgia, but they have a traditional data center business as well. About a year ago, February, March of last year, when I was last in Canada with Renmark for presentations, my partner Zach was in Atlanta meeting with ATL Data Centers about creating a resilient energy system that would provide cost avoidance for the operation of this data center to maximize the profitability in Bitcoin mining. And we all know that you go back to March of last year and Bitcoin was in the $3,000 to $4,000 range. So it was really critical to identify opportunities for savings. So we began to work with ATL Data Centers about that solution, and based on a number of different factors and economic analysis that we did, it became clear that with companies such as MicroStrategy, Square, and PayPal really validating Bitcoin as a currency, there may be some opportunities here for CleanSpark to use this as a test case and a demonstration facility of just how valuable a microgrid can be. So we entered into an agreement and we closed on this acquisition in December of last year. Since we closed, we have ordered Bitcoin mining equipment to increase the capacity by 33%. So as an example, as of closing in December, we had 3,455 application-specific integrated circuit miners, A6 miners, producing about 200 petahash of data. By the end of this month, we'll have deployed 4,950, and we'll have improved that data participation from 200 to 300 petahash. That's important because that's a direct reflection of the revenue that's generated. So if you look at the timeline here on our growth plan regarding the mining facility, by the end of January, we expect to have the production capacity increased by 33%. As I mentioned before, more than 4,900 A6 producing 300 petahash of data. By mid-year, we expect to be fully complete with our energy increase from the current 20 megawatts of power to the more than 50 megawatts of power. That work has already begun, and the initial deployments of power that are coming online have already started, and we expect to be fully complete by July. The company will continue to add mining machines incrementally as additional megawatts come online from our facility. We expect the 30 additional megawatts to increase our rate from 0.9 to 1 exahash, which we can go into the details about exactly how many calculations that is per second, but suffice it to say it's mind-boggling. So by July of 2021, we expect to be fully deployed with 50 megawatts of capacity and more than 14,000 miners installed. The mining operation is a very highly profitable endeavor for CleanSpark, especially because we control the energy expense. It may be worth noting that a number of competitors have recently entered the space and continued to expand their operations. The operations that CleanSpark has targeted and our strategy here is to decrease the single largest cost in Bitcoin mining, and that is the energy component. So by reducing the energy cost and maximizing the output, we believe that we can maximize the profitability. With Bitcoin's volatility, we believe that currently we can be profitable at or below $6,000 per Bitcoin, and that with the full adoption of our solutions, those numbers can drop by 30 to 40%. So just a quick summary. As of January 9th, we're mining an average of 1.4 Bitcoins a day, which is 43 per month. So since our first day mining on December 10th, we've mined 44 Bitcoin. The current 5-day moving average price for Bitcoin is, as you see on your screen, just over $36,000. So with 3,400 active miners, our current monthly revenue, based on the 5-day average run rate of Bitcoin, is $1.5 million. And I want to also add that we don't necessarily sell every coin that we generate. We utilize some forecasting techniques, and we sell some and save some based on market conditions. So to summarize our overall revenue segments, software as a service and controls, which is our MVSO, Impulse, Grid Fabric, Plaid, and Canvas, has average margins of about 90%. Our consulting services, which are provided by our professional data analysts, as well as our engineering staff, etc., has margins exceeding 60%. Hardware, which is our intelligent switchgear that I discussed, we have deployments all over from the locations, hundreds of locations throughout the U.S. on the nation's largest retailer, through U.S. secure installations such as the U.S. Embassy in Beirut, Lebanon, and a more recent deployment in Africa. Those margins, because it is a more energy intensive, more hardware intensive deployment, the margins are smaller at 15%, but that does lead to subsequent software licensing, which gives us long-term revenue opportunities within our SaaS, software as a service model. And then as you see, Bitcoin mining with an average margin based on the 5-day closing average of about 80% per coin. So our growth strategy, continue to expand our sales. As I mentioned initially in my comments, we have a backlog of more than $6 million with a proposal pipeline in excess of $30 million. And if anyone was on the presentation just last month, you'll know that those numbers have increased dramatically in spite of Corona. Our $30 million targeted revenue for the 2021 fiscal year has increased. At the completion of our fiscal year in September, we forecast that we had done, or we announced that we had done $10 million in revenues, but forecast $20 million for the coming year, or doubling our revenue yet again. Following the acquisition of ATL data centers and subsequent contract developments within the software and technology side of our business, we've revised those targets to $30 million, which represents a 300% increase over 2020. And we're growing that through partnerships. The energy side of our business is a one-to-many approach. As I started to talk about, an energy developer already has an existing relationship with their client, and we can assist them by increasing the value of those legacy assets by adding software and controls, but perhaps storage or a fuel cell to those deployments to really maximize their value. We've expanded our market segments. EV initiatives, a number of months ago, we announced a partnership in conjunction with the Ford Motor Company and our partners over at WeBull that allows us to repurpose second life EV batteries to utilize those batteries in residential and commercial storage solutions in microgrids. Does a couple of things. It maximizes the value for the microgrid user, but it also eliminates the environmental impact of recycling a waste battery. So we look at it as really making a real difference in producing value in those microgrid solutions. The communications protocols, as a result of the Federal Energy Regulatory Commission that passed new legislation just September of this year, it allows for energy producers and developers to participate in utility grid programs. The requirement for that is a certified communications protocol, which Grid Fabric proudly provides. And the team at Grid Fabric, Ben and Matt, are some of the kind of leaders and early movers within that space who were excited about the solutions that we can offer through that, as well as Bitcoin mining. And the last point of note here is our M&A activity. We're actively pursuing targets that make accretive growth opportunities for us. We raised $40 million about 60 days ago, maybe just a bit longer. And the ATL data center acquisition was initially targeted as a cash acquisition. But the principals of that company identified and recognized the value that adding resilient, renewable energy to that data center and reducing the levelized cost of energy made. And so they instead elected to become shareholders of CleanSpark, and that transaction was completed largely with equity in the company. So we're still sitting on a significant portion of cash, continuing to investigate opportunities for acquisition and development of additional technologies. As I mentioned before, rapidly growing revenues. This graph has changed. As you see, 2020, we did hit $10 million in revenues. We're forecasting $30 million in 2021, and conservatively expect to hit that $100 million threshold by 2023. It may be worth noting that we anticipate achieving profitability within the coming months. Quick summary balance sheet. As you can see, about $38.5 million cash on hand. Current and total assets show that we're very stable with our balance sheet. Our current and total liabilities, those represent mostly revolving and trade debt. These numbers really talk about some of the deployment of some of the resources that we have. Also included in there is about $500,000 in a PPP loan that we expect to be forgiven, giving us total stockholders equity of $52.1 million, total liabilities and stockholder equity of $58 million. So we're real pleased with where we're at. Quickly, our cap structure as of 12/31, we have 23.8 million shares outstanding. Warrants 1.1 million at an average exercise price of approximately $23.74. And then you can see the outstanding options, 613,000, largely distributed amongst our management team and our team of professionals throughout the company, with an option weighted average exercise price just over $7.60. So in sum, why CleanSpark? Rapidly increasing revenues. We've got significant cash on hand to lead us into profitability over the coming months. We do have a leading edge technology, but probably the most important of note is we're a true dual threat in strong market segments, both distributed energy and Bitcoin. I don't mean to talk about the fact that Bitcoin is certainly a buzzword, as is cannabis. But if you go back to September of 2019, CleanSpark deployed its first energy system in partnership with an energy developer for cannabis grow opportunities. So as we see the increase in legalization of cannabis, obviously being as energy intensive as both of those industries are, we expect that to have a material impact in CleanSpark's business going forward. As I mentioned, we have a top 10 ranking, strong reputation in the industry. With the new legislation, we expect that only to grow, and we have strategic alliances across key market participants, both domestically and abroad. So with that, thank you for your attention. This has been my presentation of CleanSpark. We trade on the NASDAQ under the ticker symbol CLSK. And again, my name is Matt Schultz. You can contact me through the email address you see there on your screen. And the phone number designated there is my personal cell phone. So feel free to reach out if I can answer any further questions that Liz and I don't get to today. But with that, Liz, let's answer some questions.
Thank you very much, Matt. And yes, ladies and gentlemen, we have now entered into the live Q&A session for today's virtual non-deal roadshow. If you haven't already submitted your question or questions, don't fret. You can still do so by using the chat function located on the top right-hand corner of the screen. So Matt, as you so aptly said, we did receive quite a few questions for you while you were presenting. So let's dive into a few of them, shall we? All right, so your first one. This viewer says, does the company worry that if the price of Bitcoin crashes, that the same negative impact will happen to the stock that it did when CleanSpark was in the cannabis space?
So thank you for that question. And it's interesting. I think it's important to differentiate when we talk about CleanSpark being in the cannabis space. CleanSpark has never operated directly in the cannabis space. We provided energy solutions for energy developers looking to create solutions for those controlled distribution agricultural facilities. I believe that the price volatility during the period of time that we were developing and deploying cannabis solutions was more due to broad market conditions than to specific industry related operations, because our participation within that industry, as I mentioned before, was limited to professional design and engineering services, as well as software and controls. With regard to Bitcoin, we see it as just the opposite. As Bitcoin experiences pressure regarding pricing, all of the other participants in that space throughout the world are going to be looking for opportunities to maximize the profitability. As we demonstrate, being the lowest energy cost producer of Bitcoin in the United States, the solutions that we develop, we expect to deliver a live dashboard showing exactly what the production runs look like, how we're avoiding costs through peak shaving and load balancing, the implementation of renewables, including solar and storage, including fuel cells, including turbines, maybe incorporating wind, and showing how to decrease the single biggest cost in Bitcoin mining, which is energy. Not only that, there was an article done that talked about the fact that current Bitcoin mining operations consume more power than it takes to provide energy for 200 million people on a global scale. The environmental impact of that alone, and those Bitcoin mining operations that are heavily dependent on non-renewables, coal, etc., are really going to see that impacted as the federal regulations change. We believe that whether Bitcoin is strong, since we are a Bitcoin miner and we keep a portion of those Bitcoins mined and recognize that revenue, as I demonstrated on one of our slides, but when Bitcoin price are under pressure, that we're going to see a massive increase in the demand for the energy solution to provide the resiliency and potential profitability to all of those other operators within the space that are paying a significantly greater fee for their energy expense.
Thank you. Your next question, Matt. This viewer asks, is there a concern that the CLSK brand has now been overly tied to Bitcoin and trades in Bitcoin and Bitcoin mining patterns?
That's a really valid question. Obviously, I keep an eye on not only the software and technology side and the energy space in general, but also the Bitcoin side of the business. And when you look at other pure play Bitcoin companies and the price depreciation that happened today, the degradation in their overall market values parallel to Bitcoin, CleanSpark's impact or our exposure to that was significantly less. I think it reflected in the share price, at least it had at the beginning of this call. So if we were a pure play Bitcoin company, and if our only differentiator was how many ASIC machines we had, then I would certainly say that there's some exposure. Again, to the first point, I think that the driving factors on Bitcoin, when all the hype goes away and the market stabilizes, what we're looking at is a currency replacement that's been kind of validated by some of the giants in the industry. And as here in the States, we're talking about $1 trillion stimulus package. The expectation for that to devalue the currency remain very real. And with 21 million Bitcoins being limited for production globally in perpetuity, that creates kind of a stable investment or a hedge against that devaluation of currency. So we believe that over time, Bitcoin is going to continue the trajectory that it's been on, maybe not quite as aggressive, but we believe that there's going to be a flight to that stability based on all of those metrics that I mentioned. The differentiator is that every blockchain that's completed and a coin that's produced, the subsequent blockchains become increasingly difficult. Not only that, but at certain points throughout the life of Bitcoin mining, there's a process called halving. And what halving effectively means is you get a half the value of Bitcoin for the same blockchain, the data put forth in completing the blockchain. As that happens, the other pure play mining companies are really exposed to that, and it impacts their bottom line significantly. I want to reiterate, CleanSpark's core business is software and technology in the energy space, and the ATL acquisition was made to demonstrate in a real world environment, in real time, put our money where our mouth is, how much better it can be, not only being a better steward of the environment, but also maximizing that profitability. So Bitcoin being under pressure, I think it's fair to say that it really positively impacts the other components of our business. So we believe that as the market begins to understand exactly how we function in this space, that we're not valued just as a pure play Bitcoin company, or as a prior question about being a cannabis company, or just being a switchgear company, but we really have an umbrella of resources that provide opportunities to maximize the value of energy and minimize the impact on the environment.
Thank you very much. It seems as though quite a few of the viewers have a lot of questions about Bitcoin, so we'll definitely try to get to a few of them, if not all of them, but don't worry, ladies and gentlemen, your questions will be handed over to Matt, as well as everyone else at CleanSpark following today's presentation. So we're moving on to a couple more questions here, Matt. One viewer asks, mining is one part, but what about usage? Can CleanSpark help the energy used for actual Bitcoin transactions become more efficient?
So that's an interesting question, and I appreciate that. And I'm kind of a storyteller. I like to give an analogy about how that works. Energy usage is really fairly fixed. The amount of energy required by a specific ASIC miner, if we're talking an S19 Pro compared to an S9, one is more efficient. It takes more energy, but it does more transactions more efficiently. So we believe that those costs are somewhat fixed. However, when you look at the landscape of a data center overall, there are significant energy costs that go to HVAC, as well as a number of other components of operating that facility. And one of the values that come kind of as a byproduct of operating a microgrid is power quality. We've done deployments all over the country where power quality has been an issue. And let me give you a specific example. On one of the first deployments we did at Marine Corps Base Camp Pendleton, there were a number of resilient energy technologies that were deployed there. Solar and wind, and there were turbines, flywheels, a number of different resources. But in the basement of the barracks that the CleanSpark had one operation adjacent to a data center, there was a geothermal plant. And so it was a smaller facility, and there are massive pumps that would push the hot water, that bring the hot water from deep in the earth up to the surface, extract that heat for energy, and push the cooled water back into that formation and utilize that heat as a form of renewable energy. It was really interesting as Zach and I looked at making this acquisition back in 2016 on an early iteration of a CleanSpark microgrid. We went in this warehouse where they had all these pumps, and the pumps were covered in dust. We're at a Marine Corps base where they practice blowing up ordnance, and so it's dusty and it's dirty. And you walk in this energy room, and everything in there is covered with dust. And this half a dozen massive pump machines, there were handprints within the dust. And so I asked the energy manager that was giving us a tour, why are there handprints in the dust? And the response was, the power quality before the microgrid was bad. It had a different sine wave and different peaks and loads, and it shifted it was inconsistent. And as a result, all of these massive pumps made a ton of noise. They're designed to have a fixed supply of power. So these pumps that were moving this geothermal energy were noisy whenever you walk into this room. Following the deployment of a microgrid, they would have to put their hand on the pump to ensure that it was still operating, because the pump became so much less noisy by supplying clean power. So it doesn't take a rocket scientist to figure out that if you can hear it, and that's a mechanical device, there are some tremendous inefficiencies. So by increasing the efficiencies of an entire operation, we believe we can dramatically offset.
So just to remind you guys, I'll tell you about what I bought here in a second. I just want to listen to the end of this to see if they give any more guidance on how much they'll actually be able to mine, because they said they have 3,400 mining units now, and they're expecting 14,000 by July. At least that's what it said on the presentation. I want to see if this is actually right. But we'll sit here for a couple more minutes, and we'll get to some live questions for a couple minutes too.
It depends is the best answer.
If you do want to see though what I bought, I did put up on my Patreon. Just gotta give a shout out there, and it's up. The two things I bought are up 5% since I bought them.
Forecast trend and understand where that is, but also look at kind of geopolitical stuff that's going on. Obviously the transition of power here in the United States has not been without its challenges, and as we look to increase the stimulus and the different economic forecasts about what that does to the value of our currency compared to the Canadian dollar, or looking at global commodities priced in US dollars, whether it's gold or oil or whatever the case may be, to have that stability of Bitcoin and to kind of try and forecast the economic value going forward. We make our trades based on a number of different criteria. The decisions to trade really come from our executive team. Lori Love, who's our chief financial officer, is a workaholic. I'll get a message on our team's app at 1 a.m. from Lori and another one at 6 a.m. And so she's always monitoring that. And I'll inevitably wake up and see a screenshot of what Bitcoin is doing on any given day, and make those trade decisions based on maximizing the value for the CleanSpark shareholders. But also making decisions to kind of utilize that as a hedge going forward. So there isn't a fixed number. I don't mean to be ambiguous, but it really just kind of depends.
Thank you. And apologies, ladies and gentlemen, but we have to move on to different questions. So this will be our last question on Bitcoin. But this viewer wanted to know, are there any other acquisitions that CleanSpark is looking into that could potentially yield the kind of revenue and margins that come or that are coming from the Bitcoin business?
Well, we as I mentioned, Zach flew to Atlanta to meet with ATL Data Centers a year ago when I was in Canada meeting with Steve at Renmark and sharing the CleanSpark story with a number of your partners and associates up there. And we had the idea at the time that it might be a unique opportunity for CleanSpark to not only sell a microgrid, but also have something to point to. And there are a number of other segments that we feel as really energy intensive and highly inefficient, as well as having their revenues based on the value of energy and stability of that power supply. There are a number of sectors that we've identified that we continue to work within to create these opportunities towards kind of the global approach, that the idea of having a power plant somewhere and then having a series of transmission and distribution lines over hundreds of miles is so wildly inefficient. And when you look at the companies or the sectors that really pay the greatest price and lose the most profit opportunity due to those costs, those are segments and industries that we're continually looking at for opportunities, not only from a sales perspective for our energy professionals to provide solutions, but also does it make sense, like in this instance, that by moving in and creating this acquisition, not only do we create a massive test bed in a real world environment that everybody can see, and we can prove that we can do this more efficient than anyone else. What other opportunities are there? So I can say absolutely, there's not a day that goes by that we don't analyze or look at opportunities within different spaces. It really comes down to measuring the opportunity and ensuring that anything we do, like I've said, 100 times in different interviews, anything we do from a standpoint of capital raise or acquisition, it's got to be accretive. It's got to make sense immediately to our shareholders. We're not looking to develop anything that's 3 years away from making sense. So there are a number of opportunities and sectors that we're investigating, and we'll continue to do so. And when it's appropriate, we'll talk about it.
Moving on. This viewer asks, has CleanSpark considered expanding into virtual power plants, or the VPP space, as part of the acquisition strategy?
Absolutely. In fact, we see a number of the partners that we have as creating VPPs. I mean, the idea that one of the developments we talked about with one of our partners, International Land Alliance down in Mexico, is an entire standalone community. And we really see the opportunity to create these grid disconnected facilities or communities that can operate in conjunction with the larger power grid if and when the circumstances dictate, to have the opportunity to deploy those. FERC 2222, which is the Federal Energy Regulatory Committee, the legislation that was passed on September 17th, really allows for aggregation of those resources to create VPPs from industries that wouldn't otherwise be energy specific power plays. Rather, it would take a shopping center or a strip mall facility with hotels, and it would allow the aggregation of all those resources to participate in those different spaces and different sectors. So we see a real massive expansion of virtual power plants, and we see that the real critical determining driving factor of that being the communications protocol, as well as the software and controls to maximize that value. So we really see CleanSpark as positioned ideally. In fact, jokingly talking with the executive team, it seems as though with the Bitcoin acquisition and FERC 2222 being passed literally days after we acquired Grid Fabric, somebody joked, do you have blackmail information on somebody that you guys are kind of one step ahead of the curve? And it really, the credit goes to the executive team. I mean, they spend a tremendous amount of time analyzing trends, looking for opportunities. And as we see these opportunities, we really are uniquely positioned to pounce on them. So we see VPPs as a tremendous foothold going forward.
Thank you. And just so you know, Matt, we've received quite a few questions for you, but we only have time for about 2 more. So I'm apologizing to all the ladies and gentlemen who have submitted questions that we haven't gotten to as yet. We definitely will make sure that Matt receives your questions following today's presentation. So I'm going to give you your second to last question here, Matt. This viewer says, first of all, thank you so much for your hard work. Can you talk about how Grid Fabric is doing since CleanSpark purchased it? Do you see residential microgrids being a big part of CLSK?
Yeah, absolutely. Grid Fabric is effectively doubling in size since we've completed that acquisition. Matt and Ben are two of the smartest guys I know. I mean, when you look at the team of people that we have, the energy professionals, the PhDs, the data analytics experts, we've got a group of people that really think beyond the way that my brain works. And so Grid Fabric is very, very forward thinking. In fact, we talked about a fleet EV charging contract that we put together, and that's with regard to buses, and how an EV bus fleet could be utilized as an energy asset by participating in grid open ADR programs. So imagine, if you will, a fleet of vehicles that go back to the base that are recharged when energy costs are lowest, but the departure from that facility is scheduled. So there is an instance of peak demand, and you have all of these EV buses that are charging in the middle of the day in Central California, and there's a demand for power. Grid Fabric's technology, not only the open ADR side, but also the IEEE 2030.5 allows all of those IoT smart devices, whether it's the charging stations, but aggregated, as well as maybe in the facility, the smart water heater in the building management system. It allows for, and this is a hypothetical, so I don't mean to say that we're selling bus energy back to the grid. I'm just giving an example. It would allow for those buses to discharge from 1 p.m. to 2:45 p.m. to participate in those grid programs, and then cease to participate in the discharge, and then recharge in order to be ready to go do the routes after school or whatever the case may be. So we definitely see that expanding. And the second part of the question was about home microgrids. We talked about the one that we're doing in Northern California. We've got some more that we're going to talk about. It's really exciting. We want to talk about the estate size, where it's massive energy consumers and grid disconnected opportunities. But there are applications for every single residence that may already have solar to add some storage and utilize technology for the controls aspect of that to provide that resiliency, make sure the critical circuits are kept live all the time, but also to avoid costs. And we see that the microgrid side of the business having a similar trajectory to what we've experienced with rooftop solar companies over the last decade. So I've said it in a number of emails that I get from our investors, both institutional and private investors, but we really feel like we've only begun to scratch the surface on that space.
Thank you. And your last question.
Last
Do
question.
you have any competitors that are vendor and hardware agnostic as well?
So the simple answer to that question is yes, but. And the challenge is they can be agnostic to a point. So you have a company that has a smart inverter, for an example, and that smart inverter can work with any different number of solar panels, but it may or may not be compatible with different storage. And the beauty of what we've designed and the flexibility of our system, spearheaded by Amanda Kback, our CTO, and her unbelievably talented group of programmers and developers, they've designed the flexibility within our system that it becomes a modification that doesn't require complete configuration or complete customization. It's simply configured to the parameters of that end use piece of equipment. So we while there are some competitors, we really see ourselves uniquely positioned because we don't have a horse in the race. I couldn't care less who the manufacturer of any of those assets are. If it's not in our library, it will be. And we look at it differently. The other competitors that we have in that space are really scheduling. And that's based on the hands on the clock. We're going to charge at 3 and discharge at 6, or whatever those numbers look like. And what's unique and what's patented by CleanSpark is our forecasting. And the language in the patent says the ability for the controller to make a decision if and when to distribute power to a requesting module. If that's not verbatim, it's really close. But the idea is that we patented the ability to make those decisions on the fly. So, if you're a small machine shop and you add a lathe and a press brake, you don't have to go back and start over. You don't have to call somebody in and say, we need to do this. The technology that we have will allow the adaptability on the fly. It localizes the controls. So it's going to make modifications based on what's the most accurate thing or parameters for the operation of that microgrid as of midnight last night. And then it's going to update to the cloud. And then if anything changes that day, it's going to modify those behaviors going forward. So if there's a communications disruption or a power outage, we're still going to have the most then current version of the operating system specifically to that end user, on-site, localized, and hardened with cybersecurity. So, when you say a competitor, is there somebody that can have a Samsung panel and an Outback inverter connected to a Tesla battery and schedule the operation of that? Absolutely. Can they forecast the weather and integrate the utility rates into that and then use the patented system to decide if and when to distribute power to a requesting module within a microgrid? There isn't anybody that can do that. And so that we really believe that we built a moat. And as we start to aggressively demonstrate what that value looks like in the real world with ATL data centers, with International Land Alliance, with some of these other projects, we think that it's going to become standardized, and that CleanSpark becomes the Xerox or the Kleenex of the microgrid space. And we're really excited for the opportunities to lead that charge.
Thank you so much, Matt. And with that, ladies and gentlemen, that now concludes our live Q&A. As mentioned before, we did get quite a few questions, so please don't fret. Your questions will be passed along to Matt following today's presentation. And if you didn't get a chance to submit a question, you can always...
Okay, how's it going, everyone? Long little conference there, long investor presentation. I was hoping they would shed some more light on Bitcoin mining, and they did. Now they didn't. I'm kind of a simpleton when it comes to Bitcoin mining, so I don't understand the different units that they give out. But they said that they had 3,400 units now, Bitcoin mining units, and from what I saw in the investor presentation, they said 14,000 by July. Now they have 1,500 coming right now. I need to look back into that to make sure that's correct. They're also talking about maximizing the output. Something that I really like too, that I'm not sure I hit on the last video or two, is their cash position. In that presentation that we just listened to, they said they had like 38.5 million in cash and only 5 to 6 million in liabilities. Now, I really like CLSK, as you guys probably know. So I think that that's awesome to see that they still have that they can drum up cash if they want to, because the stock price has gone up so much. But they don't have to necessarily, because they have so much cash. I'm hoping that they can continue to increase capacity. So someone says that everyone's a simpleton when it comes to mining. Nice. So a couple things I want to talk about. First of all, I want to hit on TRXC, what I did with it. I want to talk about the stock, or the assets that I bought this morning, and some that I bought over the weekend, if that gives you any indication for what I did. I might be doing a video on this too. And then maybe BNGO or whatever else you guys want to talk about for a minute. So TRXC, I sold it this morning. I believe it went up to like over $2, $2.80, I want to say, pre-market or something like that. I sold it. I woke up a little bit later. I actually did sleep in today, for everyone that's commenting about that, how I look tired. I actually slept in, woke up around when market opened, and I sold it at 177, I want to say. It's hard to beat a 74% profit or 73% profit in a day. So I realized I could have held it. That it's up to $1.84 now. If I could have held it, and I would have made a little bit more money, but I sold it. Again, hard to beat that kind of return in a day. That being said, I'm still holding on BNGO up to $5.80. I did a video on it earlier today, in case you want to see that. Shout out to the Patreon. I'm just going to throw it out here real quick. I can update them so much faster. So I was someone that used to not want to spend any money on anything, but now I see there's a lot of benefit to being able to get in even just a few minutes early on some different trades like TRXC, like BNGO, like NMTR, like Check, like all these stocks that we've bought into that have done so well. I think mostly everyone that I've heard from makes up the initial cost of Patreon like in the first day, and some are talking about how they can pay for it for 3 years after the first day or something like that. So if you're interested, it is down there. Now, what I bought today was something that I've never bought, and yes, I do give buy and sell alerts right when I do it on Discord and on Patreon. They're linked. So right when I buy and sell a stock, I buy it and then I go into the Patreon and Discord. So I do upload some exclusive videos too, not a ton, but I think I have 3 or 4 on there now. The things that I bought today, the 2 assets that I bought today, I've never bought these before. I bought Bitcoin and Ethereum. So I bought them yesterday for the first time. They had dropped both about 10%. Now they've dropped 15 and 20% today. I bought in though earlier this morning, like an hour ago, pretty much almost exactly an hour ago. Now they're up both like 5% or so, I think, since I bought them. Actually, a little bit more because I think I got in Bitcoin right around 31. Now it's almost 33. Same thing with Ethereum. I bought at 920, I want to say, or 930, something like that. Now it's around 1,000. The reason I bought is because of something that I considered, right? So I think of Bitcoin and Ethereum as a store of value, also a protection against inflation. However, I started thinking about something different. So straight off the bat, I need to tell you I'm associated with BlockFi. There's a link down below. I'm associated with them. I get referrals when people sign up. However, I'm actually putting my money where my mouth is. I started thinking about something a little bit differently. They pay you a percentage of whatever asset you have in there as APY. So for Ethereum, they pay you 5.25%. For Bitcoin, they pay you 6%. I want to say up until you have like 3 or 5 Bitcoin or something like that. Now, how I think about it, and I said this to my Discord today, it makes a lot of sense if you think Bitcoin or Ethereum are going to go up to buy it on these types of exchanges that give you interest. Let's say you buy Ethereum, I won't break down what Ethereum is, but let's say you buy it at 1,000 per Ether. If it goes up and you have 5.25% that you make, let's say you buy $10,000 of it, you get 10 Ether. That would be $525 in APY that you get throughout the year. Now, if it goes up to 2,000 per Ether, now you have 20,000 worth of Ethereum or Ether. Then you're getting paid 1,050 in APY. So it's different. It's so different. It didn't even make sense to me at first that this is how it works. Because when you think about this kind of stuff, usually think about like a dividend. A dividend stays pretty much the same. I mean, they might raise the dividend, but whether the stock price is $10 or $100, that doesn't affect the dividend. That affects the dividend yield. So if you buy a dividend yielding stock that's 5% and then it doubles, now the dividend yield is just 2.5%. The dividend stays the same. However, with APY, if Bitcoin or Ethereum, let's say they 5x, then you're getting 5 times the dividend or the APY. So that's kind of how I'm thinking about it. I wanted to jump in when it dipped. So I jumped in one time. I jumped in again today. I'll throw more money at it if it keeps on dropping. But I hadn't thought of it as something that is income producing. I just thought of it as a store of value and kind of speculative. But now that there's that extra 5 to 6% APY, it's just really attractive to me. I might do a video on this, like I said, just because it is income producing then. And again, like let's say everyone's right. Let's say Kathy Wood's right. Let's say JP Morgan's right. Let's say all the people that say that Bitcoin's going to 5x, 10x. Let's say it 10x's and it goes up to 300,000, whether it's in 5 years, 10 years, 15 years, 2 years, who knows? Let's say it goes up to 300,000 from where it is now. And BlockFi is giving you 5% or 6%. if you put in $10,000 and then at 10x's, you have $100,000, you'll be getting 6% interest. I mean, they can change it too, right? And you have to take into account they're not FDIC insured. A lot of these cryptocurrency exchanges aren't, but what I'm saying is you could get like a 60% yield on what you invest today if it goes up dramatically. So you have to believe in Bitcoin and Ethereum in the long term, but so many people are turning towards it. I saw today as kind of like a nice drop, a nice buy-in. I mean, it's down 20 to 25% at the low today. So I wanted to throw in some money in crypto. Again, I've never bought it before yesterday, but I told my Discord about it. Everyone in my Discord was, gave me the thumbs up and everything. I think people are coming around to Ethereum and Bitcoin in a way that they haven't before, especially when more and more companies, big companies, are considering it. I mean, we have Square. I think it was Square that bought $50 million worth of Bitcoin. We have more and more people popping up every day that are talking about it, giving bullish predictions. JP Morgan gave their bullish prediction of 146,000 in, I think, a year. So that's just something to consider. Now, I did not sell NMTR. I'm thinking about it. I'm up a couple percent. That's the only penny stock I think we bought recently that didn't explode like crazy. Now, NMTR did go up, I want to say 20 or 25% after we talked about it, but I just held on to it at that point. Okay. So what do you guys want to talk about? I feel like so many people are reaching out to me about different stocks. However, I have a hard time because so many people reach out to me about different stocks. So it's hard for me to research all of them. Right now, I'm hearing ZOM a lot. I'm hearing Gaxi. STPK is another one that I've heard a lot because Dead Inside, I think, made a video on it. Let me know what you guys think. What do you want to see? So if you missed the part about CLSK, you can rewind a little bit. I think I talked about it maybe 5 to 10 minutes ago. BNGO, buying stocks, TRXC. So I talked about TRXC. I ended up selling it today just to take the profit. Nothing wrong with the stock, but it's hard to beat 70% up in a day. Okay. I didn't sell an MTR. I did not. Interesting. So a lot of different stocks here. Yeah, so if I'm just gonna throw one more plug. If you guys want to know when I'm buying, I always tell people when I buy in the Patreon before I make the videos on them. So if you guys want to get in earlier, you can see, because I mean, like, there's so many different stocks here, so many different things that people are talking about. It's going to be hard for me to decide, like, on the spot here, like, yeah, I do need to check out this stock or something. I'm not selling BNGO though, just so you guys know. Oh, one other thing to mention too. I meant to throw this in there earlier about the Patreon. You guys wouldn't believe who just joined the Patreon. Give me your guesses in the comments. What YouTuber just joined our Patreon? I actually joined theirs too, but nope, not Walrus, not Dead Inside. Keep guessing. Who else is very similar size to me? Not Stockmo. Someone's gotten it right. I did have someone named Meet Kevin that joined, but I don't think it's the Meet Kevin. But yeah, so Jack Spencer just joined it. I do know most of those other people though. Jack just joined our Discord, so yeah. So that's pretty exciting. Getting a little bit of extra exposure to Jack, another guy that picks out penny stocks pretty early on. So yeah. So let me know what you guys think about CLSK. I'm pretty bullish long term. I did, again, just for everyone that didn't see, I did buy Bitcoin. I did buy Ethereum. I'm getting a nice 5 to 6% yield. Also, I have GUSD, which is just a stable coin that I have on there that pays 8.6% APY. Again, not FDIC insured, but I'm not putting my entire net worth in it. I know a lot of other people that do have a lot of money in BlockFi too. There's a link under the video. But I know, like, for example, Andre Jick also works with BlockFi. He has $400,000 in BlockFi, and he's putting more money in there, it seems like, all the time. So let me know your thoughts on these down below. Let me know your thoughts on all these different stocks. Again, I've talked about a lot of them. If you're wondering, like any stocks that I've talked about recently, I did a video just this weekend, 10 seconds on each of them. And I talked about some of the penny stocks today. So thank you guys so much. I really appreciate it. If you guys want those links down below, definitely check them out. I appreciate that too. We'll see you guys in the next video. I plan on doing something this afternoon, maybe tonight too. We'll see what happens in the market, if there's anything that I need to talk about. Thanks, guys. Bye.